Good morning, everybody. Hey, welcome to this Wednesday, the 5th of June. Hope you're doing well as we get halfway through this week. We've got a few earnings coming through with jobs reports coming from ADP. We'll talk about that and more when Dave joins us here in just a few seconds. And before we do that, let's not forget that there's a lot of things in this world we cannot control. However, you can take control of your portfolio by knowing the amount of risk you have in that portfolio versus the amount of risk you should have based on your current circumstances and how far you are from retirement. Give us a call at 863-382-0037 to schedule your core retirement analysis. And with that, we got Dave coming up next.
5.7 Highlands Light FM. Michael Bublé is there. Morning Dave is here. I appreciate you joining me every morning, by the way. It's 20 before 9. Check in on your money and see what Wall Street's doing this morning. Actually, it was on the charts anyway yesterday, a relatively uneventful day. A lot of stuff went on, though, and that means we get to talk to Phillip Statler from Statler Financial Services in downtown Sebring and try to sort all the news out. Phillip, good morning. How's life this morning?
Hey, doing well today, Dave. It is halfway through this first week of June, and hey, the indexes have done so-so. I mean, they had a couple of down days, and yesterday was kind of a mixed bag. But we'll see today if we can hold on to at least a little bit of green ink that we had this morning.
Oh, yeah. I mean, yesterday we started out feeling kind of stinky about it at the beginning, but the Dow ended up 140 points. Standard & Poor's was up 8, and the NASDAQ was up by about 28. That's almost, in the context of the big numbers we're at, that's the kind of day, at the end of the day, you kind of want to see the market having. Normal, modest rises. I mean, 1/3% of the Dow was relatively big, but the other two we're talking about, 15%, 0.15%. That's the kind of move that you can sustain day after day if things are normal. And I say that's a big if normal, don't you?
Yeah, exactly. Is there anything normal these days?
I don't think so. But anyway, it was generally at the end of the day when we had some kind of stinky futures to start the day out. Day ended up mostly in green ink, and that brings us up to this morning. And we got a bunch of data dumps coming out as we begin the flood of employment information. Yesterday morning, the JOLTS report came out for job openings in the month of April. And if you're a Fed watcher and you want to see the employment situation start matching up job openings with the number of people actually looking for work, that might be your Super Bowl yesterday, because job openings in April fell to the lowest number since 2021. Now, if I wasn't looking for a decrease in a match between those two numbers, I'd call that pretty bad news, wouldn't you?
Yeah, I would too. I mean, it dropped to 8.1 million. And I can remember, not too long ago, we were running 10, 11 million job openings. So down to 8.1, I mean, that's a 20+% decline over the highs we saw.
And just about the time a whole bunch of recent graduates hit the job market.
Yeah.
I don't know. I haven't seen the number of people that are actually on the employment rolls, but I still think we're probably looking at least 5 jobs for every active job seeker, don't we?
Oh, I'm sure we do. I mean, that's true. I mean, obviously, the jobs that everybody wants may not be out there, but there's definitely a job.
Yeah, if you need a paycheck, there's something there. It might not match up with your skills necessarily, but at the very least, on a macro basis, the Fed has to be looking at the notion of finally the employment market slowing down a bit. Indication number 2, this morning at about 7 this morning, we get the ADP private sector report. And I always preface this by saying their actual numbers are virtually never right, but they do give a pretty good indication of the direction. And according to ADP, the big payroll service, we added 152,000 private sector jobs last month, and they were expecting about 20,000 more than that. Once again, an indication of a leveling off of the employment picture a little bit.
Well, it is. And so, I mean, I think that obviously the Fed, I don't know, probably doesn't put a whole lot of weight into those numbers. But the number we get on Friday, they do put some weight into that number, the unemployment number and the unemployment rate. And so that'll be a key number. And if this is any indication, then just maybe that number will be less than expected.
That could be I hate to say good news, but at the very least, if you're trying to get the Fed to hold the course as far as their interest rate strategy, it probably is. Yeah, like I said, the number is never anything you can take to the bank from ADP, but they have a pretty good track record on giving us a directional trend anyway. So underachieving is, pretty much something that we're half expecting now on Friday. The other number that starts out our Wednesdays every week is the number of mortgage applications that were made according to the Mortgage Bankers Association. The adjusted index last week was down by 5.2% from the week prior. I generally don't look at unadjusted numbers, but when they're this big a difference, I do. The unadjusted change in mortgage applications down 16% from the prior week. And that's with a little bit of a change in the yields on the bonds that actually control the mortgage rates. I got to believe that says things about the housing industry I don't want to hear.
It does, Dave. And I've had several conversations over the last week or week and a half with realtors and clients and just kind of surveying the whole real estate market even here, and it's slowing down. They may not want to admit to it, but it is slowing down, and we are seeing things sit on the market a lot longer, not just a little bit longer, but a lot longer than they used to sit on the market. And so we'll continue to watch that and see how long those real estate signs stay in the front yard.
Absolutely. It needs to be said that by and large, still the Highlands County area is still a faster moving real estate market than the national norm. Last time I talked to an agent about a month ago, told me the average time on the market was, a couple of months right now, which sounds like forever compared to the boom times when, they'd go up and 2 hours later there'd be an offer pending. National average is up around 90 days. But yeah, when you start going from 1 week to 8 weeks, that's a slowdown, even though we've got a hotter market than the nation as a whole.
Yeah, exactly right. That's the truth. And it's taking long, especially the higher price the house, the longer it's taking to get it sold.
Yeah, I've got a friend with a home that's worth, maybe $100,000 more than mine is, and he and I have a tendency over beers periodically to compare which direction our prices are going. Mine, as a relatively small home, has been going up in price. I can't tell there's any challenge in the real estate market whatsoever from my perspective. His, worth about $100,000 more than mine, has generally been going down fractionally in value, and he made a decision not to downsize to a condo based upon the fact that his home was going down in value. Sit and hold for a while, which, kind of illustrates the notion that depending upon where you're at in your position, there's a lot of different stories in the naked city, aren't there?
There really are. Even here locally, there's different stories depending upon the price point your house sits at.
Absolutely. Little trivia items that have been coming out, just news that hits down the line. Netflix had a hard day yesterday after their disappointing revenue forecast, and now they're saying they're going to scrap membership metrics as being one of the things they report. Gosh, can't imagine
why
they do a thing like Yes, 75,000 streaming services out there. Ain't nobody gaining a lot right now, so Netflix is saying, well, heck, we're not even going to admit it anymore. Google has changed chief financial officers. Is that good news, bad news, or does anybody care?
Who knows? Who knows what that's going to do? I like this one though, Dave. That Texas, there's a group putting together a new national stock exchange in Texas. That was interesting.
We were kicking that around before we went on the air. I remember a day when there used to be a Chicago stock exchange. There used to be a Denver stock exchange. There was one in San Francisco. Basically, if they exist at all anymore, they're basically folded into just, specialty markets. So it's not new, but coming out of Texas, I always kind of wonder whether or not there's an underlying political motivation there somewhere. I mean, whether I agree with them or not, Texas is like another planet sometimes.
That they are. Different country.
Absolutely. I did notice my fear and greed index that I watch has now moved from neutral down into fear, and I'm not really 100% sure what prompted the change on it down the line, because we got a relatively adequate week going on. Evidently, there's some expectations for the rest of the week and next week's Fed meeting that have some people nervous out there.
I think you could look at a couple of things I think might be leading into that, Dave. One could be the Trump, court case came out of New York. That could add some fear. Then you've got the volatility. I mean, we're bumping our noses on all-time highs, so that could add some fear to the index. So I can see where there are some things out there that could be causing people to start to doubt what's happening in the marketplace.
And you and I have been kind of saying this for a while. We got to get the earnings up to match the index levels. And we always get surprised every time they bump into a new record because we still got to get the earnings up to make a price-earnings ratio that actually makes sense for the valuations we've got these days.
That's right. And sometimes that takes a while.
Absolutely. Just to give everybody a heads up, tomorrow, obviously, the flood continues. We get first-time unemployment claims to give us a picture as to what the unemployment picture is going to look like. We'll also get the challenger job cuts. We got the job openings figure yesterday. We get job cuts figures tomorrow. And then on Friday, the big kahuna number that you referenced while we were talking about ADP, the official non-farm payroll increases, they expect it to be better than last month. And the ADP number tends to indicate that may not be the case.
Well, that's right. They do expect it to be better than where it was last month. So we'll wait and see what the government comes up with.
And going an interesting 7 days because all of this stuff goes into the hopper for the Fed meeting Tuesday and Wednesday of next week, and we'll be parsing every word they say after that release comes out. Modest up on the equities indexes yesterday, Phillip, 45 minutes before we open this morning. What's going on?
Well, right now, Dave, we've got some green ink across the board. The Dow's up 0.25%. The S&P 500 is up almost 0.4. The NASDAQ 100 is up almost 0.7%. So looking good on that side of the coin. Silver actually closed yesterday below 30. It's up right now about 0.5%, still at 29.76. Gold's up 0.5 point. And crude oil is up 0.7 at $73.77 a barrel.
Looking at the overseas, I like those numbers, by the way, on the oil. Looking over across the ponds, the overseas markets, the Asian Rim kind of has a zero-sum outlook when you look at the mainland Chinese market. We have a decent day. They go down. The mainland Chinese markets were down by like 0.8%. Most of the rest of the Asian Rim closed up ever so slightly this morning at 6 a.m. Over in the European community, mostly they're up. United Kingdom's off by about 0.25%. Everybody is up, and some of them almost to the point of party time. Italy's up by almost 1.5% halfway through their day. The overall European index up by, on average, about 1% halfway through their trading day. Getting risk out of your portfolio if you're getting anywhere close to retirement ought to be job one. And looking at what we talk about every morning, affecting your retirement, that means you got too much of it. How do I find you to find where it is in mine?
Dave, that's why I developed the core retirement design to help people design the retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Sunday or Saturday, and 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here tomorrow morning to talk more unemployment figures, I'd wager, right here on Light FM. Have a good day, and we'll see you then, Phillip.
All right, man. You take care.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day, and I'll join you again tomorrow. Bye now.